All right, what is going on, Discord and YouTube family? And welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is June 29th, 2025, year of our Lord. And oh boy, looking at this 3-month chart, you can see that, all my videos about short squeeze, about, they've come to fruition. We're all already at all-time highs. You can see the S&P 500, Dow Jones is almost there, Nasdaq is almost there. So all of the, we nuked this place, we bombed this place, Trump tariffed this. You should remember all of these things, right? Take a moment and remember all of these things that happened this entire month, this entire 3-month period. And what did it lead to? All of that bad news only did two things. It scared buyers out of their positions, right? It trapped sellers, and the market bought everything back up and brought us to all-time highs, because structurally, that's where we should be. All right. So as per usual, we're going to break down my analysis on the S&P 500, the Nasdaq, the Dow Jones, and I may even do a little overview on gold, or if I get bored, I might just say screw it. Anyway, so the 3-month chart on the S&P 500, let's start there. So the 3-month chart, we have 1 day, 4 hours until the 3-month chart has ended. We talked about this wick in multiple videos, basically for over the last 3 months. We talked about this wick buying up, getting above this candle, and then the target being these all-time highs up here towards 62.8375. With 1 day and 4 hours remaining, I seriously doubt if we come to the low end of this candle. So the 4-hour or the 3-month chart is going to close very, very bullish. Moving down to the monthly chart, we can reiterate that thesis by looking at the month of March, where we had this strong buying coming in off the lows. The month of April, I'm sorry, strong buying coming off the lows, and then month of May, putting in the higher low and the higher high. Now the month of June, placing the higher low and potential higher high. Again, I don't see us coming back below 56.68. I don't see that happening, at least not in 1 day, right? So you got to give the nod to the bulls on the monthly time frame as well. The idea that we're going to drop after coming up here this aggressive is just asinine, right? Like, will we get a pullback? Sure, absolutely. But the idea that we're going to drop should just go away, in my opinion. Okay, for now, right? Looking at the weekly time frame, looking at everything that has happened, we had this long crawl up, right? Ever since the gap up from May 5th, we just started consolidating, right, on our way, chopping all the way up, and you'll see it more defined on the daily time frame. We chopped our way up, and then we got that strong impulse after trying to sweep these lows, and that impulse looks to be not complete, meaning it looks like it's still going to go and target this liquidity at 62.90. And you'll see that when we come down to the 4-hour time frame, my analysis is going to support the thesis of going higher, but also give you the opportunity to look for positions on the pullback as well. As we spoke about before on the daily time frame, you can see we were in this rising wedge pattern, right? We were just kind of, grinding our way up, and then we kind of broke out of it, right? So you can see, I'm sorry, I drew it wrong, but you can see this rising wedge pattern coming all the way back from May 5th from this gap here, right? We rose, we just kept balancing out extreme lows, extreme highs, extreme lows, extreme highs, and then finally we broke it, right? Trapping a bunch of people down here trying to go short. Remember, this was the news that Iran had gone on the attack, or we had dropped bombs. Everybody, including myself, was expecting a gap down. We did get a gap down, but it was quickly filled by this candle here on June 25th, and that was pretty much the low of the week. We never saw those levels again, and then the market went and targeted liquidity up above here from February 26th, going into the fair value gap of February 21st, and now we're looking to take out the ultimate liquidity highs now that all the inefficiencies have filled. So let's drop down to the 4-hour time frame. Again, this analysis is not going to take me long. There's not a lot to look at. We have a shortened week this week, and I want to get you prepared for that as well. So I'm not going to spend too much time looking at the analysis on the chart. So we look at the 4-hour time frame, right? And we see that, again, we had this aggressive push up and we left behind a lot of gaps, right? That doesn't mean the market needs to go fill them right away. It just means that they're there and they will get filled at some point. If we're looking to be bullish on the week, I want to see the market trade down first. In order for the market to trade down, there's a couple levels that I would like to see the market retest. The first level is this 1 hour fair value gap that sits between 61.7375 through 61.6975. If we can retest that 1 hour fair value gap, then we're looking at a weekly projection of 3.94%. Taking into consideration that this is a shortened week, this projection could be smaller or larger, just depending on how they deliver price. But usually it'll be a smaller projection just because it'll be missing a couple of days of full price action. 64.1350 would be the target on the average week. But again, I like to reiterate that this will not be an average week. So 3.94% we might not get. We could just consolidate between this range, but we'll see how price is delivered. If we're looking to be bullish again and we drop down, meaning we get a nice pullback that we should have gotten last week with all of this aggressive overbuying, right? The market being overbought, it usually tends to pull back. And if it does, it'll be targeting the weekly fib or even this daily demand zone. My projection is off the weekly fib, so we'd be looking for 6098.50, basically 6100 on a pullback, and then again up 3.94%, targeting the 63.3850. I would venture to say that the next psychological level is 6300. If we can't make it up here, would also be an opportunity to look to potentially short this market, because that'll be the official all-time high from the, I should say, the averaged all-time high with B adjustment on. We're already above all-time highs if you turn B adjustment off, but because we don't have levels of liquidity with B adjustment off, I like to turn B adjustment on when we start breaking all-time highs, so I can see to the left exactly what levels we're tracking into on average. Okay, so if we're going to be bearish, we want to see the market trade up first, right? Let me take off these levels. I don't know why they're here. We want to see the market trade up first, and right above us, like I was saying before, if you turn B adjustment on and you go to the daily time frame, you can see that this is the area right here that we closed at, or that we rejected at the end of the day on Friday. This area is the last supply zone on with B adjustment on, right? The last supply zone that exists before all-time highs. That being said, this is exactly where I would anticipate the pullback coming from. 62.62 would be the inside or the outer edge of the supply zone, which is where I would be looking for the market to pull back about 3.84%, pushing back below the weekly fib and getting us back into discount price. That level would sit at 6,020.50 from 3.84%. If we can't make it into the supply zone, then I like to see the market stay below the previous day high, tapping to the top of the chessboard high at 62.34, looking for about 3.86% to the downside, dropping all the way back down to the 59.92s. Now, with a shortened week, we could just get consolidation, meaning the market could just decide to say, hey, you know what? We're not trying to pull back and let buyers out or let sellers out of their position. So instead, we could get something where we just sit in this range here and just build value, right? So just be on the lookout for that. You'll kind of know, I guess you'll get a good idea of what the market's trying to do from how we open on Monday. So we'll see what happens on Sunday night, and then we'll go from there. But those are my levels on the S&P 500. Let's move over to the NASDAQ. All right, breaking down the NASDAQ time frame, we go over to the 3-month. Again, this is with B adjustment off. Doesn't really matter with the NASDAQ because we're up so high, like it's basically the same level. But with B adjustment off, the NASDAQ has already hit all-time highs, just like the S&P 500. And you can see, just like we talked about before, the 3-month candle was very, very strong. When we were down here, I was saying be careful because the 3-month candle job is to take out these highs right here. We ended up doing that, and now we're in blue sky territory is what people like to call it. Moving down to the monthly time frame, we can see higher lows, higher highs, higher lows, higher highs. It just plays to reason that we're probably going to get a higher low inside of the next month candle. If we don't start to break through structure, we'll put a higher low in and continue this uptrend. There's a lot of fundamental reasons, starting with the fact that President Donald Trump is basically saying that he may announce the Fed chair early. The reason why I think this is bullish for the stock market, although it could cause confusion in the bond market, I think this is still bullish for the stock market because the stock market or the futures market futures market is forward looking. If Trump announces a Fed chair early, we all know that the only Fed chair he's going to announce is somebody that's going to be loyal to him. Well, what does he want? He wants interest rates cut immediately. So the market is going to start buying that rumor. Banks are going to start to rally. Tech stocks are going to start to rally. They're going to buy that rumor over the next 11 months because that's how much time Fed Jerome Chair Powell has on his books, right? Essentially making Jerome Powell a lame duck Fed chair, right? They're going to look toward what the next chair is going to do. And then once that chair is elected, they know interest rates are coming. That's usually when we'll get the pullback. So we'll see exactly how it plays out. I just wanted to add that little caveat as it was on my mind. Looking at the weekly time frame, however, we look and we can see we started that uptrend, or not started, but we got the gap up from May 5th. And ever since then, the week of May 5th, we have not looked back. Now we're above these highs, and the only thing left is for us to go higher, maybe pull back into this high right here, 22,211. But the NASDAQ is looking as bullish as ever. And looking at the tech stocks that push the NASDAQ, Google and Amazon are going to be stocks to watch this week because they're the only ones that just started the rally toward all-time highs. So they could potentially push the NASDAQ even higher than where we are today, while the NVIDIAs of the world potentially pull back. Looking at the daily time frame, we see the same thing, rising wedge pattern, right? Like, I don't got to keep saying it. Rising wedge pattern, and now we've broken out of that consolidation, and we're looking to go and push higher. We go to the 4-hour time frame, and I'll bring out my levels for my top-down analysis, and I'll tell you exactly where I'm looking to trade. If we come over here to the 4-hour time frame, you can see that we're inside of the last supply zone, or the supply zone that was created if I was to turn, I think it was like B adjustment on or something like that. Yeah, here we go. So this supply zone right here, if we turn B adjustment on, you can see that we're basically right inside of that last little supply zone right here. I could actually draw it a little differently while I'm looking at this here. We go right about there and right there, okay? So that means that we're right inside of the final boss, so to speak, right? With B adjustment on. So what are we looking to do? The market is looking to eat up all this liquidity and potentially pull back. Those are the only two things it could do. I guess we could consolidate as well, but I think we'll at least see some movement. So if I want to be a bull, I want to see the market trade down. What is beneath us? Well, if I take a Fibonacci retracement and I go all the way back to where this buying started, right? From here all the way up to here, then that leaves me with a few levels, right? It leaves me with a 70% or 30% retracement, 50%, and a 70% retracement. So because there were no gaps on the NASDAQ like there were on the S&P 500, I'm going to use the fib for levels that I like to see the market pull back to. Therefore, I'm looking for 30% or 70% if you draw it upside down to be the retest at 22,447, taking us back up 4.7% into 23,505 or 4.7%. If we can trade down lower to the 50% mark, that of course will be the weekly fib at 22,198.75, looking for a push into 23,251 or 4.75% to the bullish side. To the bearish side, I want to see the market trade up back into the previous day high or chessboard high, not going up too far, right? But from the previous day high, chessboard high, looking at about 4.62%, pushing us back down to 21,781 and 21,688. Now, the other scenario that's not based off, that's not included in my weekly projection is this 4-hour fair value gap right here. This level is important. I think you should mark it on your chart. If you can find it on the 4-hour, this is the first 4-hour fair value gap that was formed. It's also the monthly fib, and it sits below the weekly fib. So this essentially would be the market flipping back into a discounted area, and this would be a major buy for me, not to mention daily supply at the high, daily demand at the low. Once we come back down here, I'd be definitely looking to buy the market. Now, we could also just, gap and go and then start pushing into these bullish areas here. And if we do that, I'll definitely be looking to trade from here up to these levels. But then once we get to these levels, I'll take my foot off the pedal and I'll be looking for a little bit of retracement back to this supply zone. So those are my levels on the NASDAQ. Let's break down what I'm looking for out of the Dow Jones. All right. Moving over to the Dow Jones, again, the 3-month chart, not going to beat a dead horse. It's bullish. Going down to the monthly, higher highs, higher lows. The only thing that we could say about the Dow is that it's got way more meat on the bones, which is why I may actually entertain trading the Dow this week, right? But it's got more meat on its bones, more levels to go before it hits the ultimate high, which is about 45,332. I got the Dow Jones going way higher than that at the close of the year. So this just is the Dow kind of showing its strength. Again, the financial sector is strong. The health sector is strong. These are sectors that are really going to push the Dow Jones moving into this week. So if you haven't charted the Dow, I strongly suggest at least giving it a look over, because it's going to have way more upside without consolidation than that of the NASDAQ or the S&P 500. And that's just based off what I know with the correlation of the VIX, which we'll cover here in a moment. Looking at the weekly time frame, we can see we built weekly demand here over 1, 2, 3, 4, 5, 6 weeks. And then we got the impulse breaking out of that demand. The target is most likely going to be 45,232 and potentially higher if you were to take a measurement and range out the distance of this consolidation. It will probably equal the distance that we're going to travel, but we don't got to do all of that because I already broke out the projections based off data. We're looking at the daily time frame, and we can see, unlike the other two instruments, on the way up, the Dow Jones did something that I really liked, hence the reason why I'm very interested in trading it this week. The daily demand zone was created on the rally up. This is not something the NASDAQ and the S&P 500 did. This is a sign that we consolidated. So when the market comes back down, it has a validated low to hold. This is why I really like the setup on the Dow Jones more so than that of the NASDAQ and ES, but I'll look for the setup, and whatever one presents itself, that's where I'll take it, right? Depending on the time frame that I have. Then we have this supply zone here that I'll mark out on the 4-hour. You'll see when I break that down. But ultimately, higher highs, higher lows, full body candles, no sign of bearish activity whatsoever. Right. So let's drop down to the 4-hour. I'll bring out my levels, and then I'll break down what we got going on for this week in regards to the VIX and the news on the week. All right. Looking at the 4-hour time frame, if we want the market to be bullish, there's a couple things we need to look for out of this market. One, we want to see the market trade down, obviously, to go up. Now, trade down could be an option, but it could just gap up and we get an imbalance, right? So you need to be aware. When I say trade down, I'm talking regular activity, but the gap could come aggressively to the upside, which would just mean we're even more bullish than I anticipated. So yes, I want to see the market trade down, but it doesn't absolutely have to remain bullish on the week. That's how we get volume imbalances on the daily time frame. Okay, so what are we looking at? If we trade down, I want to see the market go to 2 different levels. There's one chessboard low, this green box right here, which sits at about 43,974 to about 43,879. We run the high, come back down, retest the low, and then we go, right? That level would be at 3.7% for the week. We'd be looking at 45,206, and I believe right before all-time highs. Oh no, I'm sorry. Chessboard low would be 45,592 at 3.67%. And yes, that would be all-time highs. The next level that I would like to see would be this yellow box here. This is, just like I mentioned on the NASDAQ, a 4-hour fair value gap that's also doubles as a 4-hour demand zone. This I really like as a pullback for the Dow Jones, meaning we would be sweeping the previous day low, getting bears excited, and then tapping into this level that sits at 43,646 through roughly about 43,557. I'd be looking for a weekly projection target of about 3.7%, putting us back into the 45,000 range at 45,206, again, taking out that all-time high. If we're going to be bearish, then I want to see the market trade up without a huge gap up, right? Trade up does not mean gap up, right? I need to see the market just, trade up and fail somewhere inside of this daily supply zone. I'd be looking for about 3.59% coming off the middle of the supply zone at 44,992. I'd be looking for price to trade back into 43,366. And again, one last time tapping the front of the daily supply zone at 44,743. Failing here would be a 3.6 weekly projection of roughly about 43,095, taking us back to the monthly fib, back below the weekly fib, very similar to what I'm looking for on the NASDAQ and the or the S&P 500. All right. So those are my levels breaking down the Dow Jones. Let's move over to the volatility index. And I want to break down what I'm seeing on the VIX. Okay. Let me share this tab instead. All right. So what I'm seeing on the VIX, and this is the reason why I say we could play around in the larger range for a little bit on the indices. What you see here is very, very similar to what I'm seeing on the indices. I see a daily demand zone. I see a daily supply zone, and I see a daily fair value gap underneath all of that needs to be filled. This gap is from December of 2024 on the VIX. And the last time we came down here, we sat down here for a long time. We got the rally up, and now the market tends to be coming back here. The VIX does not like to go below 14 or 13, at least the one that I study, does not like to go between the 14s and 13s, but it will go from 18 back down to 14. So what am I looking for? If this daily demand does not hold, we are going to skyrocket on the market, but it may be a slow grind up because lower volatility on the S&P 500 means that we're going to face a lot of resistance, but we're ultimately going to be headed up. Okay. Now, what I would like to see is I would like to see us bounce off this daily's demand zone and start heading back up to the weekly fib, back up to the daily supply zone, basically giving the market a little bit more juice. You need sellers to come in to support the VIX so that the market can move with a little bit more fluent, right? It'll move way more fluent the more volatility it gets in the market. Right now, VIX below 20, a little dangerous when it comes to volatility in regards to price action. You'll notice every time the VIX gets below 20, you get people, all over Twitter saying, man, the market's really choppy. It's like, yeah, because the VIX is lower. The market's having a problem finding new sellers, right? It needs to find sellers to increase that volatility. But anyway, in regards to my previous video, I talked about the VIX gapping up on the rollover. We did that. We tapped into the supply zone. And then I talked about this gap being the reason or the fuel for the all-time highs. The market tapped into the daily supply. We started to fill that gap. And lo and behold, we got to all-time highs. So when we come back to this demand area, I'm looking for the market to either flush straight through it, right? Like I don't even want to see it play around here. I want to see it flush straight through it, get through the other side of the 17s. And then I'm looking for the VIX to start pushing down toward the 16s. And then I'll be comfortable continuing the rally in the bullish direction. I'll just probably trade the Dow Jones instead. So those are my levels on the VIX, my thoughts on the VIX. The other thing I wanted to do is pause, take a moment and talk about the news and the Independence Day schedule, right? This is the official site, the only site that matters when it comes to how the market is going to operate. So if you're looking for the information, you can go to cmegroup.com and type in trading hours. That's what you're looking for. In regards to the equities, July 3rd, the market will close early. That's Thursday, July 3rd at 12:15, the market will be closed. Okay. It will reopen at its regular time at 1700, right? But it will close again on the 4th early at 12 p.m. If you're trading gold or the metals, it's going to be a little different. If you're trading on the correct prop firm, if you're trading live, this is the schedule. If you're trading on Apex or some other prop, this is the schedule. But if you're trading on Top Step, they're going to follow the equity schedule only. But the metals will actually close at 4 o'clock on Thursday, right? And then they'll reopen Friday, July 4th at 5 p.m. These are Eastern Standard Time, right? And then close on the 4th of July. So the metals will be open basically the whole day on Thursday. So that's something to keep in mind for going into next week if you plan on trading. All right. Now, in regards to the news, there's not much going on this week, but we do have some red folder news that you could probably pay attention to. One, all of these speakers talking right now, depending on what they're saying, the market may be in a holding pattern just to figure out what they got going on. But there's no red folder news on Monday. On Tuesday, we do have the JOLTS, right? The job openings report. This should be important. And the ISM manufacturing is always important. So definitely be looking to trade on Tuesday because the volatility should be a little bit up. Remember, Wednesday, July 2nd, we have non-farm payroll, private information, right? Like this is the non-farm ADP, so you're going to get that private information. Remember, we'll probably get non-farm on Thursday, right? Which is right here, because we have the shortened week. So the volatility that you normally get from non-farm could start to develop as early as as early as Wednesday. But non-farm is usually a 10 out of 10 on the volatility rating. So you definitely want to be aware that Thursday, July 3rd, the market closes early and it's also non-farm payroll. So just plan accordingly. That's all I got to tell you, right? And then July 4th, I'm not sure if I'm going to trade this day. It just depends on what I got going on with the fam. But July 4th, the banks are closed. Usually, in my experience, July 4th is a really good day to trade, to be honest, because when the banks are closed, there's not a lot of resistance, right? The market just trends in one direction, usually goes up, hits a level, and then comes down, hits a level, or vice versa. So if I'm available, I'm definitely looking to trade July 4th because every time I've traded it, it's been really good price action. So those are my thoughts on the news. That's my thoughts on the market as well. If you guys have any questions, opposing thesis, leave them in the comments down below. For those of you in the Discord, if you want me to go over gold, come back, DM me, whatever. We'll go over it in the Discord. That being said, my name is T Hobbs. This is the Top Down Analysis, and we will catch you on the next one. Peace.